a.m. Path Chat, March 9th, covering the FX market. I know we informed you guys we weren't sure when the next one was going to be, but we had time, so we decided to make one. We're trying to keep on a regular schedule. But again, I'm just going to let you guys know, due to some personal issues, I'm not sure when the next one will be. We might be able to do one tomorrow morning. We might not. We will most likely do one Friday afternoon, and you'll definitely get one Sunday afternoon, Sunday evening. You'll probably get multiple ones Sunday afternoon, Sunday evening. But trying to keep these things consistent for you. Before I give it over to Mike, most important thing today is happening in approximately 25 minutes, closer to 26 minutes, and that's the ECB meeting and the results of said meeting. European Central Bank has its rate decision. It is not expected to change at all. It's expected to be the exact same. Euro deposit facility rate, Euro marginal lending facility, all supposed to be unchanged. There is, however, a press conference, and at that press conference is when they talk about essentially the quantitative easing policies that the ECB has had in place. And one of those that is supposed to be pulled back a little bit is the TLTRO. That's the Targeted Long-Term Refinancing Operations. Now, every ECB meeting, they've announced a new one. So what is that? It's essentially, it's a program put in place that almost makes long-term loans to banks free. And essentially, the banks get a loan from the ECB with an interest rate, and then the ECB purchases that back in a very targeted way to kind of make the loans free. And it was designed to free up capital for banks that were struggling. So they're expected to not announce a new round of that. So it would be a surprise if they did. That would be one of the things that surprised the market. Everything else is expected to be the same. So watch for comments. If the news is making a big deal over a comment, you should probably pay attention. And again, they're already in the process of tapering back the bond purchases, although it was a very scheduled process. So if they make an announcement in that vein, you need to keep an eye on that. In terms of the economic calendar, nothing really big coming out the rest of the day. We did have Japanese machine tool orders come out better than expected last night. And the Swiss unemployment rate essentially was right where it was expected. And again, this was a revised rate. So again, jobless claims today, nothing else really important coming out today. You got natural gas from the EIA, but that shouldn't move the market in general too much. Obviously move the natural gas market. Let me turn it over to Mike to let you know what he is seeing on the FX charts.
Okay, great. Thank you very much, Bob. Euro reached down, moved below our trend line through the 12.5 GAN level at 105.37, reached down to our next target level, another GAN level, 105.23. Now we've rebounded back above the trend line or retesting our overhead key levels. We just got through 105.61, tested the 8, which comes in at 105.69. If we get above that, we have a small little cluster of 105.74 to 79, and then another cluster of right around 105.87, and then the 21 comes in. So there's lots of overhead resistance. If we had a dramatic move, the next major target is to the upside is right around the 106.20 area, right in here. If we reverse back down and get through a lower trend line, the two targets, 105.10 and 104.94 are the two bigger targets to the downside. Pound. Mentioned yesterday, there's not a lot of targets in here besides some GAN projections. We reached down and retested right around yesterday's low. The next level down from there, 121.90, and then from there, 120.77. Should we rally, we have overhead resistance from this declining trend line, and then the 122.16, and finally the declining 8 area, which is an area, not a hard wall, of about 122.43. Yen, again, retested new defining point and significant level. We rallied up, closed back below the trend line yesterday. Today we're holding above the trend line. We retested it from the bottom. Now we rallied up, and now we've dropped back below the 114.66 significant level. Should we attempt another rally? Next targets, again, today's prior high, then 115.12 on a substantial move higher. Next major target isn't until the 116 to 116.01, right up in here. If we pull back below the trend line again, we have 114.24, then 114.01. Then we have our rising R zone, which puts a bottom target 113.68. On a bigger move down, 113.47 to 113.36 is going to be key. Swissy, flirting with this trend line, 101.45, reached up to our next little cluster right around 101.66, 64 to 66. A rally back up, that's the levels you're going to be watching for. If we do get through there, watch for retests of the 101.75 area. And then on a really substantial rally, 102.23. Pulling back, the trend line right around 101.22 to 20 area, rising 8, 101.17. So the 17 to 20 area is going to be key. If we break through there, 101.02, and then finally the 21 exponential comes in 100.85. Aussie reached down to our significant level already today and a key gain extension, 74.93 and 74.93.2. We've bounced off of that, which is not unusual for significant levels. You have really rapid moves when you hit them or pierce them, which we're having now. So we've pulled back on a continued move higher, 75.22, and then 75.42 are very key levels. On a move back down, watch for the retest at 74.93 level. CAD, this has been on a tear recently. Besides a small little pause here, we've really moved up to our next key level we talked about yesterday, the 135.1920 level. Above there, 135.40, significant level, and then end of a clear path move, 135.75 all the way up there. But there are major resistance and multiple stopping points in there. So this is more of a scalpy area until we get through it. If it pulls back, nothing really support until we get back to the 134.41, and then the rising 8, which comes in at 134.08. And then below that, we have the trend line again and the cluster right around 133.65. This is actually going to be a redraw. It actually is an official redraw to there. So that actually raises where the trend line would be supporting and coming in pretty close to where the 8 is. Finally, Mexican peso reached that prior breakdown area yesterday, 119.67, moving higher into rotation zone. So this is going to be a redraw to there. And then we have next levels higher, 19.88802, declining 21, coming in at 19.93658. Turning back lower, watch for retest of 19.61300, and then support from this now redrawn trend line. That's all I have for you. It's somewhat of a quiet day so far. Back to you, Bob.
Thank you, Michael. Yeah, you're right. It's a very quiet day. We're just kind of sitting waiting for the non-farm payrolls to see if they support the Fed or not. Fed Watch Tool at the CME Group now has the March rate hike at just below 90%, and actually chances of a June rate hike adding another 25 basis points is starting to creep up. That June rate hike was listed at 39.1 yesterday. It's now 41.7% likely for a rate hike in June. So the non-farm payrolls is going to move that needle one way or the other. It looks like the March rate hike won't go away, but start looking at the June expectations if you want to see what's happening there. In terms of Canadian dollar, watch the crude oil price. Crude oil price weakening definitely has an effect on the dollar Canada. It weakens the Canadian dollar. People are often surprised to know that our second largest trading partner in total trade is Canada, right behind China. They're not far behind at all. Third is Mexico, and they are our largest export market. A lot of that has to do with the back and forth flow of crude oil, so keep an eye on that. This is Bob Iacchino and Mike Arnold from Path Trading Partners. Please like and subscribe these videos if you're enjoying them, and we will talk to you next time. Promise you we'll get one out Sunday afternoon at the latest. There could be another Path Chat in between there. Thanks, everybody.